Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw stocks down again today as the Treasury yield continues to climb higher.
Yeah, this market is worried about higher interest rates. So you've got selling in the stock market, you've got selling in the bond market. Where is all this money going? That's my question. But anyway, we'll take a look at three stocks as we normally do that are still looking interesting in this unsettled market. Dycom Industries, DY is the symbol there, forming the right side of a pretty good-looking cup base. In the energy space, a lot of reversals among oil and gas stocks. Today, we'll take a look at Valaris, VAL, a provider of offshore contract drilling services. And finally, Interactive Brokers, which reported earnings earlier this week and really is not budging after big gains.
Sounds like a plan. Well, first, let's take a look at the major indexes. The Nasdaq today down 0.6%. Harder hit, though, was the S&P 500 down 0.8%. Even harder hit, small caps today. The Russell 2000 down 1.3%. The Dow down just 0.3% today. But Ken, we're continuing to see resistance here at this 21-day line for the Nasdaq for the time being.
Yeah, just having a hard time, having buyers come into this market. We had that great upside reversal last week, and the rally was looking pretty good, especially on Tuesday. But we kind of gave back some gains, and then we got 2 days in a row of selling. So, kind of being reminded that the market is in a correction here, and sellers can still dictate the action sometimes. But as long as we hold above that Thursday low, this rally is going to be intact, and it's too early to declare this rally dead.
That's exactly right. We'll continue to keep a close watch on that 21-day line here for the Nasdaq, because it seems like a move above that level. I can take a look at QQQ. That's the sidebar that I want to open because I want to look at this technical tab. We're about 1.8% below the 21-day line for QQQ, which tracks the Nasdaq 100. We need a gain of about 1.25%, 1.5% in some volume heavier than the day before to feel a little bit more confident about this rally attempt.
Yeah, at least to feel, at least more confident about the possibility of a tradable rally into the end of the year. And I don't know, I think the things are still lined up for that to happen. It's been a pretty good start to earnings season. It started off with pretty good reports in the financial sector. Airlines are reporting strong numbers and giving bullish outlooks for Q4. Earlier this week, we had Netflix and Intuitive Surgical, IBM saying good things today in the Dow. That had a great day. So good start to earnings season.
Except for Tesla.
Except for Tesla. Yeah, well, not all perfect, but so the earnings season has been generally pretty good. Obviously, next week's going to be huge with all the high-profile technology reports. But we just have this this persistent selling in the bond market that's putting upward pressure on rates.
Yeah, so let's take a look at the 10-year Treasury yield. Looky there, continuing to skyrocket. Essentially, now we're at the highest levels since June 2009. Or 2008, pardon me. This is just a big move that we're seeing here. And, we have said we didn't come up with it. We didn't coin it, but don't fight the Fed. It feels like a pretty big thing that the market is weighing right now. We have seen a lot of selling. There are pretty solid arguments to be made for finding at least a short-term bottom here, Ken. But when you take a look at this chart, I mean, this is pretty jaw-dropping. I don't really know how else to describe it.
Well, it is jaw-dropping, but I do think that there are reasons to believe that this upward trajectory of rates might be ready to cool off, and that is for one reason. First of all, this obviously looks very, very extended here, and if you look up TBT, which basically moves in line with this 10-year Treasury yield, you can see how extended this is as well. But what's interesting right now is that Fed funds futures traders right now are expecting the Fed funds rate to be at 4.5% to 4.75% by the end of the year, and that implies basically two 75-point hikes in one in November and one in December. I think when you look at the 2-year yield right now, which was I think 4.61% was the last. That is pretty much right at the Fed's terminal rate of 4.6%. So whether the Fed's terminal rate goes up to 5%, which is possible, it just tells me with the 2-year note trading where it is at 4.61%, rates may be ready to just kind of pause here and take a little breather. So there's some saying that the Fed's terminal rate, and that's the point where they might consider to slow things down and possibly even pivot. So right now it's at 4.6%. Some are saying that could go up to 5%, but still with that 2-year yield all the way up at 4.6, I think we could expect rates to kind of, calm down sooner rather than later.
Yeah. Take a little bit of a breather. That might help buoy the market. All right. Well, moving on, let's take a look at Dycom, ticker DY. This is a neat telecom infrastructure group, was not able to hold on to its strong intraday gain, still closed positive, and we're seeing an RS line blue dot here, Ken, and some heavy volume behind the buying as of late.
Yeah, and you can see not a great close, but the market kind of faded and it didn't close very well today. So a lot of stocks gave back early gains. So I think the daily chart here looks a little suspect, but let's switch to the weekly chart because what you see here is just really a nice symmetrical cup base forming back above the 10-week moving average, and not ready yet. But what I like about this chart is you can see when the stock was trading all the way down around $12-15 a share, and you see how it ran all the way up to 100. Yeah, right in that area there. So this is a stock that has shown the ability to materially outperform the market and trend very bullishly. So we'll see if Dycom, or if the market's going to let Dycom make a run here. But the fundamental picture is quite compelling. You can see revenue growth has started to pick up the pace in recent quarters, and look at those annual earnings estimates. It's hard to find annual earnings estimates that's strong. So they're in a good industry, providing specialty contracting services to telecom providers. So business obviously is going to be good over the next couple of years, and we'll see if the market's going to let this one run. But good technicals, good fundamentals, nice combination.
Yeah, estimates strong and revised higher at that. So with where the stock is now, Ken, what would you like to see from here? Does it need to pause a bit longer, or what's the thought on an actionable buy point?
Yeah, it's forming a typical base here. We just would call this a kind of a cup U-shaped base. So it's still in the early stages of forming the right side, but good chance that it's going to close solidly above its 10-week moving average this week. So needs to get a little bit closer to its recent high, and then maybe it'll drift lower one last time, shake out the last remaining sellers, and then you get a nice upside breakout. But we've been talking about the fact that it's we're not in a market that's conducive at all to stocks breaking out to new highs and sustaining gains. So we'll need to see signs that new institutional money is coming in from the sidelines and fueling good gains for the indexes in higher volume, and then maybe Dycom will be able to start moving.
Okay, and next on our list to check in on is ticker VAL Valaris, a driller stock, holding up quite well here as it works on the right side of a handle. And we've been talking a lot about oil and gas stocks once again. The first 5 months or so of the year was all oil and gas. And now here we are again, Ken, with a number of base resets and breakouts and setups in this sector.
Yeah, well, Valaris is not a widely known name in the drilling group. It is a provider of offshore contract drilling services. They actually operate in 6 continents, so they've got a pretty broad reach. Mentioned a lot of reversals in the oil and gas sector today, and Valaris did give up some gains, but just like how it's been trading tightly in recent days, another situation where revenue growth is accelerating, and then you can see the estimate this year expected to earn $1.10 of share, and then growth more than tripling next year. So good fundamental story here as well. And I thought I liked something about the fund sponsorship here. I think fund sponsorship is still on the light side, but it has
Picked up.
doubled. Yeah, it has doubled
Mm-hmm.
over the past year or so. So no mutual funds in the or no funds in the IBD mutual fund index own it, but like the fact that fund ownership has doubled over the past year, like I said.
So with where the stock is trading now, Ken, let's open this technical tab. It's a little over 10% above the 10-week line, but at the same time, on the verge of clearing a handle buy point. One could even argue maybe testing a trend line buy. What do you think about that?
Yeah, so the weekly chart here, obviously, it is what we would refer to as sort of a wide and loose base. So it's not the best setup here. But if we go back to the daily chart, again, trading has tightened up recently. And for this one, basically, I'd just be looking for a move over this the 60 level, preferably with some volume. And I think it's worth a shot if it can do that. And if it does that on a day when indexes are rising in heavy volume and showing nice percentage gains, that's an environment where a technical breakout has a decent chance of working.
Okay. And last but not least, let's take a look at Interactive Brokers, IBKR, a strong move on the earnings report or in reaction to earnings, up almost 7% on Wednesday. And today, fighting back from its intraday lows to close down at just 0.4%. So this base is about 37% deep. It is working up the right side. Ken, what do you think about where we should be looking to enter this one? Seems watch list worthy.
Definitely watch list worthy, and it's not ready yet. Although some people may have bought and kind of rolled the dice. But if you go back to the daily chart, the fact that this is a stock that's up 2% on Tuesday and Wednesday, it barely gave up any ground today. So that shows that there's strength and support behind the heavy volume gains here. What I'd like to see this stock do is just kind of trade underneath Wednesday's high, like it did today, and then for several days, if it can kind of just hold tight and trade sideways below Wednesday's high, that may set the stage for another move higher. So just a good one for the watch list, but have to respect the strong technical action so far.
Mm-hmm. And the last quarter's numbers looked pretty darn strong, Ken.
Well, I know their customer accounts were up 31%. They are just over 2 million in customer accounts now. So business is going well. They had a nice, obviously nice revenue turnaround in the latest quarter after some soft times. And look at the annual estimates as well. Have been revised higher recently, and annual estimates look pretty good here. So good one for the watch list, and has got that combination of good fundamentals and good technicals.
All right. Well, thank you so much, Ken. And thanks, everyone, for tuning in. We do remain on a follow-through day watch, and we hope you join us tomorrow morning as we break down all of our thoughts in real time, starting 10 minutes before the opening bell on IEBD Live, investors.com/IEBD Live. We will be joined by Kathy Donnelly. She's co-author of The Life Cycle Trade. So she's definitely focused on those earlier stage stocks, a lot of them that have gone through a lot of due diligence and are trying to come off of their lows, maybe get above the 200-day line, working on some bottoming bases. We will catch up with her on what's on her radar right now. So it should be an interesting show, Ken.
Yeah, very. Kathy's great because she does focus on the newer companies still in the early stages of moves. It's been such a tough IPO market in recent months, but I'm sure she's going to have a few newer names that are on her radar. So looking forward to it.
Yeah, that'll be great. All right, everyone. Thank you so much for watching, and we'll see you back here tomorrow.